Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first we will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a quite important structure level which the market is rejecting to the upside. In fact, from here, all these previous rejections to the downside were created. Every single time that the market tested this zone, it got rejected to the downside quite aggressively. Then, with this impulse to the upside, the market broke above that zone. And what we know is that in the market, previous resistance, once it is broken to the upside with a confirmed break above the zone, so a close on that specific time frame above the level, in this case we are on the monthly time frame, a previous resistance area becomes a support area. And in fact, the market went and tested here the previous resistance, turned support, and rejected it to the upside. Now, at the moment, we are still in the process of getting this rejection to the upside away from this zone. So from a monthly standpoint, everything seems quite bullish and the market is still in the impulse phase. However, we have to keep in mind that at any moment, the market should follow with the correction before then continuing to the upside, because no market just moves to the upside in a straight line. Along the way, there will always be impulses and corrections, and that is what defines an uptrend in itself. So essentially a series of higher highs and higher lows. That is the definition of an uptrend. So at this point, what would seem like the next logical thing would be to see first a correction and then the continuation to the upside. So first, for the market to create a higher low right here and then a higher high. However, until the correction will start, we don't know that we are in the correction phase. So for now, we're still in the impulse phase, but we have to keep in mind that the market does start to seem quite overextended to the upside. So at any moment, we could see this potential correction. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, everything is quite clear. We have a market which was moving in a range. We had here the top of the range, and at the same time, we had the bottom of the range exactly here. And the market was moving in this range-bound scenario until we had this candle here. This candle broke above the high of the range, and after the break above, as I just explained, a previous level of resistance, once it is broken to the upside, becomes support. The market tested the level here and rejected it to the upside because at that point it was previous resistance turned support. Right now, we see a very similar thing because we can now identify a new structure level, which is essentially this one here, which is now the new previous weekly resistance from which this red candle was created, which has now been broken to the upside and the market is retesting it. So since we now have an impulse and a correction, the next step would be potentially a rejection to the upside, completing this weekly impulse correction and impulse pattern to the upside. We can also notice that since we have an impulse and we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, showing us how we have the 0.32 and 50% retracements lining up exactly inside of this zone. Now, this creates confluence of support, and when you have a confluence of support area, you have an increased probability of seeing a correction to the zone and then a potential rejection to the upside, because when you have confluence of support, it means that you have multiple layers of support in the same area of price, and that increases the probabilities of seeing institutional longing inside of this area. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, we have clearly a market which is range bound. We have the top of the range, which is currently this resistance zone, and we have the bottom of the range, which is clearly the support zone. The market has already tested and respected in multiple occasions the high of the range, and at the same time, it has already respected in multiple occasions the bottom here of the range. And until the market will remain in between these two levels, we could simply expect more horizontal price action to be created. So in order for this market to continue higher, we need to see a potential break above the zone. Only if we get a break above the range, only at that point, after the break, on the retest of the previous resistance turn support, that is where we have high probabilities of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. So if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, so essentially the non-commercials, and we check the data precisely for gold, what we can see is that in the long run, net positions have massively increased. We went from having a net positioning from an institutional perspective of 131.1k net positions, so with quite a bit of shorts and not many longs, all the way up to now having 287k net positions, with a huge amount of longs compared to shorts from an institutional perspective, 339,000 longs compared to only 51k shorts. And we can also notice that with the very last report, we start to see a slight shift back to the bearish side for gold, with shorts getting added and longs getting closed from an institutional perspective. So even though the positioning is clearly to the bullish side, with the very last report, we start to see a bit of shorts getting added and a bit of longs getting closed. So we have to keep this in mind when we look at the chart. So let's keep it in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, if the market here will break above the zone, at that point, all this previous resistance would become support. But if the market remains inside of this range, or even if the market breaks below, that would obviously signal that there is the possibility that that top of the impulse that we were identified on the monthly time frame could be in, right? And at that point, we could see the correction before the continuation to the upside. But if the market will break above the range, at that point, it means that we have a high probability of still being in the impulse phase. So if we see this impulse and correction, at that point, there is an even increased probability of seeing more institutional longing inside of this zone, which could trigger the next rejection to the upside. So if we see this impulse and correction, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market inside of this zone after having broken and retested this level, I wouldn't be surprised to see a potential rejection to the upside away from this area. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.